of this outlook, as well as the presentations, will be sent out to all the attendees afterwards. So if you miss something, it will be in your inbox within an hour. And if you do have any questions, please type them in the GoToWebinar little box over there. So presenting is me, Natalia Mistverishvili, and Jesse Fitzmaurice, our New England analyst. So we're going to start with just a quick overview of 2013-2014 winter, just because it was a very exciting couple of months for everybody involved here. We'll look at the polar vortex, the weather that caused such strong gas pricing, the impact of oil generation with the winter reliability program, and then jump into our outlook for spring 2014, look through our forecast for demand, gen transmission analysis, outages, imports, exports, and finish up with a summary. So just going back and looking at the winter, we did have very below average temperatures, in some regions 3 to 4 degrees. And the difference this winter versus every other winter is, we've had a pretty cold winter across pretty much most of the Northeast. We saw it in PJM, New York, New England, parts of MISO. So this was like the second coldest winter on record. The coldest one we had was 2002 to 2003, which included parts of New York and Pennsylvania. We had the strongest day in this winter was December 17th, with temperatures in single digits across most of the New England, and that drove pretty high extreme demand levels. It wasn't as strong as our all-time peak of 22.8 gigs. And with above average snowfall, that definitely helped enhance the cold conditions in New England. This is just another way of looking at it. This is the averages since 1981 till 2010, average temperatures. And as you can see, the 2014 dropped down close to 22 degrees, but yet again, not as cold as we saw in 2003. So energy consumption-wise, and that's also according to New England ISO, January totaled over 12,000 gigawatts per hour, and that's up 4.4% compared to January 2013. And that's due to the fact that the entire January month was 24 degrees Fahrenheit compared to 29 degrees Fahrenheit in January a year ago. And that resulted in more heating degree days than any other month before. And cold weather drove that demand for natural gas for heating as well as the power generation. And as you can see, we had very strong gas pricing. That polar vortex that hit around January 25, 26 drove Algonquin all the way to $78. This is a graphic just to show the storage withdrawals in producing regions, and you can see 2013, 2014, we had the strongest year, and this is again the phenomenal due to the fact that we had strong load not only in producing regions but across most of a good chunk of the United States. So what helps New England out more or less is the fact that we had the winter reliability program that was implemented because of a strong winter last year. So due to that, due to the scarcity of gas, high gas pricing, we've seen oil coming online more often than any other year. So while average natural gas prices in January were 24.19 per MMBTU at the Algonquin pipeline, we saw that the oil stayed at $15.44. So that actually made oil units more economic. And when we saw gas coming traded closer to like $16, $17, we saw those oil units coming in. And as you can see in the second bullet, we had, in the beginning of winter reliability, we had over 3.44 million barrels and as of February 3rd, about 2.3 million barrels of oil from that program has been burned. So, I mean, going forward, what our concern is just with the whole gas run-up that we saw this winter, that might be a possibility even for the summer if the conditions, load conditions, will allow it. Definitely not over the shoulder months that we have right now, but there's something to look out for during the summer months as well at this point, and not. We don't think it's going to be only winter phenomena. The other thing, we do have a few base load units that are going to retire. That's more towards the end of the year. So that's going to make us more susceptible to those gas spikes, as well as more susceptible and more reliant on oil as well as the LNG. This is just a different, more graphical representation of oil depletion that we saw this year, and you can see January we've seen that that run up within 10 days versus December and November. This is just a small chart, quick chart, just to show you the peak days. We saw December 17, 21.5 gigs close. We had the day had cleared 192, but the strongest clear we saw was January 23rd during the polar vortex. We had gas at $78, where the day had cleared $437.84. Despite not being the strongest day of the winter, we do remember that we did lose Britain coal unit stepped out of the supply stack, so that forced gas to be on the margin versus oil when most of the days it tried to be on a margin.
All right, good afternoon, everybody. This is Jesse speaking. I just want to thank you for joining us for our spring outlook. And we're going to start with the load first, our spring 2014 expectations. Genscape basically predicts a below normal temps for the spring period, about 1 to 2 degrees colder than average. And a cooler than normal start to the season has already occurred. We've had about 1 or 2 cold events. There's actually blizzard conditions in eastern New England today, Cape Cod and mostly Maine, but that's pretty phenomenal. Now, it's been quite cold already. Basically, with strong warmth unlikely, we have unusual levels of cooling load are not predicted. Weak shoulder season demand levels are expected throughout much of the spring. And the risks are in the cooler direction for spring 2014, and this places the overall demand risk to the downside. So the graph we have here is the sum of combined outages in New England pulled from IRR, and we just wanted to highlight the greatest risk periods here. And I think it stands out that the period between April 2nd and April 23rd shows the greatest amount of outages, upwards of 4.5 gigawatts. During this period, we will have 2 nuclear outages, Millstone 2, and Seabrook. Also note that there will be some external interface derates during this period, and that will cut imports into the New England region. We will highlight those as we go on. So the nuclear outages we're facing this spring, we have the Seabrook outage and Millstone 2. So Seabrook is New England's largest generator. It's 1.2 gigs, and this is going to be a major outage, as we have not seen this unit go on refueling since the period from September 5th to 11/1/2012. So it's been almost more than a year we've seen a prolonged period without Seabrook. One thing to note with this outage is that from the previous outages we've taken, it's tend to average about 41 days. IRR is stating that the outage will last 22 days, so we anticipate that it may last longer than expected. So that's what we have for Seabrook. For Millstone 2, that starts about next week on April 5th. So basically there'll be about 2 weeks in April where we'll have both Millstone 2 and Seabrook out. And this is going to cause higher than average heat rates. When we look at the periods of previous nuclear outages, we could see that these heat rates, mostly above 9, from the last Seabrook outage, that was above 10 heat rate for an average. They're quite high. And this graph here basically shows what the total nuclear generation in New England will look like when we have Seabrook and Millstone on outage. So it'll be about 2.6 gigs versus about 4.5 gigs normally. This is a very low amount. It's only been surpassed twice in the 4-year period. So we expect some good risk over the next 2 weeks or so. So this spring we have 3 major transmission outages that stand out to us. They're going to be 2 Sandy Pond line outages affecting the phase 1 and 2 import interface, and then Long Mountain to Pleasant Valley that'll affect the NYAC flows. So the first line outage we're looking at is Sandy Pond line 35112. This is expected to derate the phase 1 and 2 import interface to 0. This outage is between May 1st and May 9th. We saw the same outage previously in September, and that did derate the interface down to 0, so we expect that to have a significant impact. The second outage is also a Sandy Pond line. That's line 3521. It's also a 345 kV. That's expected to be out April 23rd to May 1st. This 3521 outage we have not seen in a long time, so in terms of gauging the impact, we don't have as much clarity. But if you look at the graph to the right, there's basically the 35112 and the 3521 lines are basically the 2 345 kVs that are bringing power from phase 1 and 2 into the New England grid. So to lose one of those, we expect to have a large impact, at least derate the interface to half. And then another outage we're looking at is Long Mountain to Pleasant Valley. We've seen this a couple times this winter, and that derates the NYAC import interface. If you look at the ISO New England TTC page, they show that derating that interface down to 500 megs currently. And we just wanted to note that April 1st may be a risky day if this Long Mountain to Pleasant Valley outage occurs, the derate occurs, and then that corresponds with the Seabrook outage starting on April 1st. So just look out for that. So the slide we have here just shows the average imports during the spring period for our main import interfaces. As you can see with phase 1 and 2, those flows remain constant between averaging around 1,200 megs for the March, April, May period. And that's why we think it's an important bullish derate in the sense that this interface, we import about 1,200 megs from phase 1 and 2 almost every day. So to lose that will be quite a bullish aspect to the grid. The NYAC flows, we will see these flows tend to follow pricing spreads more than they did in the winter. In the winter, we tend to see strong imports from New York almost every day, and that's really just due to the AGT Transco gas spread. With AGT priced above Transco for most of the winter, we tend to see NYAC imports despite unfavorable spreads. But with the gas spreads collapsing, we do expect those flows to follow pricing spreads more, which we'll touch on in a later slide. The New Brunswick flows are expected to come off versus their winter levels. We're expecting between 200 and 300 megs from New Brunswick over the course of the spring period. And just one thing to note from this slide is that 2011, 2012 had a Point LaPrue outage, so it's more realistic to expect similar flows compared to the 2013 period between about 300 and 400 megs. So the graph we have here shows the relationship between the Roaston MPX spread and its influence on the NYAC flows between the NYSO and New England regions. We tend to use this spread to forecast the next day flows between the NYAC tie. The spread we're talking about is the current day, and we'll compare that spread and see how that'll affect flows for the next day dam. So the blue line you see is the NYAC flows, negative is imports coming into New England, and then the red bar is the Roaston MPX spread, basically Roaston minus NPX on the current day. So what we see here, if you look toward, this is last year's plot of spreads from March 1st to May 27th. If you look at this graph, we'll see that when Roaston prices above NPX by $5, imports into New England over the NYAC tie should be expected the following day, as seen during most of March 2013, where we were getting between 500 megs and 1,500 megs from New York. But as we go through the spring and load and gas pricing relax, we tend to see the MPX Roaston spread narrow, and that'll reduce the magnitude of imports into New England, but still maintain net imports between 0 and 500 megs on most days. As you can see, when that spread sits between 5 and -5, there really isn't a flow direction certain way for those flows to go. As we go into the spring more, when MPX price is $10 or more above roasting, a large drop in imports flowing into New England should be expected the following day, and net exports into New York become more likely as the frequency of MPX over roasting increases into the spring season. So we're going to tend to see more days net exports into New York as we go into the spring season, as we go into May, June. All right, so in summary, what we expect is that cooler than average temps that are expected during the shoulder months combined with generation outages may result in a higher heat rate and high gas pricing. The gas run-up this winter is an indication of a possible strong summer if the load levels permit, and there is a risky period during mid-April where historically high baseload outages should prompt high heat rate levels of +9 heat rate points. And also, imports from neighboring regions are expected to be more volatile than the winter months, with flow directions being dictated more by changes in the load, New York spreads, and gas pricing. And that concludes our 2014 New England Spring Outlook. If you have any questions, please feel free to send them in, and we'll do our best to answer those right now. All right, so we have one question coming in, and it's as to, we mentioned that we will be seeing baseload outages in the coming year. The question was what outages we'll be seeing, and we'll be seeing Vermont Yankee on outage, going on outage for good in Q4 2014, and then Brayton Point, the full coal unit, is expected to go on outage also, and that will have bullish effects to the New England grid. And that's all the questions we saw today. I'd like to thank everyone for coming in today and viewing our Spring Outlook. We will send out these slides along with the recording to everybody. And also, if you have any questions, just feel free to IM us on the Genscape Needful AIM. Thank you.